We have a great panel today. I'd like to ask everyone to come up to the stage, and we'll start with Yuri Totobrowski, who is the Executive of Telecoms and Media Investment Banking at Standard Bank. Next, we have Mike Peo, who's the Head of Infrastructure of Energy and Telecoms at Nedbank, followed by Eden Siegel, who is the Chief Investment Officer of Convergence Partners. And then we have Aniko Sigtavari, who's the Head of Africa and Latin America, TMT Group, International Finance Corporation, IFC, of course, and Keith Webb from Investment Banking Infrastructure Finance at Rand Merchant Bank. So thank you all very much. Okay, so our music, we don't get hot stuff, that's our music? Okay. So thank you all. I think this is a fantastic panel, and I'm really pleased to have an opportunity to moderate this discussion. The topic, as you know, that we're supposed to be talking about that is listed in the program is investment consolidation and profitability, changing the continent's telecom landscape. And so I want to make sure that our discussion here today is quite relevant for everyone in the audience. We have some high-powered financiers in front of us, and we want to make sure that our remarks are relevant for all of you who are mainly not finance people. And so I'm going to start by asking Yuri a question, and that is, what do you see as the main opportunities that banks are looking at? What are you wanting to invest as you go forward?
Well, clearly one of the big opportunities for the mobile operators will be data and data services that they will need to offer in the future. As a bank, we look for business plans that focus on the services that we expect to be the drivers going forward. In this sense, it's true that there are a number of new players that have appeared, particularly in the 4G and the LTE sector. And these are standalone players where I think they're very early stage investments where banks typically have a bit of a problem in investing. What we look for there is definitely strong sponsors, a well-developed business plan, a well-mapped out demand analysis, and a clear idea of how any break-even or how profitability will be reached. Currently, I think most of these projects are still at the stage where they need to be funded by equity and mezzanine. And I think it's only once there's a track record of profitability that the banks who typically provide debt financing are able to come in. Clearly, this is the case for the smaller players, the independents, the major mobile operators who've got established subscriber bases. At this point in time, I feel they are relatively well placed to attract financing.
Okay, so Yuri, since you point out that equity investors are those that are required for the early stage standalone players, maybe we should skip over to Eden, since that's what he does, and ask you, what are your priorities? What types of deals are you looking to invest in?
Thanks. We are a growth equity investor, so we like to put money into businesses that are already proven and profitable, but need capital and partners to take those businesses to the next level. So it's not the venture or early stage part of the ecosystem, but equally not the late buyout stage. In terms of the themes that we see and like, we are big fans of the wholesale infrastructure space. So there's been some progress, but a huge amount of work still to be done. A lot of interesting projects in the fiber space, a lot happening in wireless. Data centers is garnering a lot of attention, and we're actively looking in that space. We're big believers in the enterprise services space. I think in certain of the bigger markets, that's already a very competitive area, but in a lot of Africa's smaller countries, it's very underserved. And then if you start to think about what services are possible and make sense in a world where there is connectivity, albeit imperfect. There are a lot of new disruptive technologies that are getting a lot of attention. I think fintech is probably the most hyped. So you're seeing a huge amount of money flowing in and around the financial technology sector, a lot of which is disruptive to traditional players. So we're looking there and casting our eye out a bit further. I think the Internet of Things and how that ecosystem is going to shape up also has some very interesting implications, both for our existing portfolio and for new capital deployments.
Are you seeing more deals than you can fund, or do you have more money chasing few deals?
The number of deals, so the demand for capital, I think, is enormous. As you heard earlier, there are a lot of, if you segment the market by size, the major players are either listed or have access to many sources of funding. They call it middle of the pyramid, really is desperately looking for money. So the demand is there. I think the challenge is that the conversion of pipeline opportunities to investments is quite tough. There's some difficult geographies, complex regulation and differences between them. And investment, ultimately, the big themes that we're talking about are very important in terms of setting the agenda and the priorities, but ultimately you invest in companies, not in themes, not in technologies or in licenses. So it really is about getting into the micro and some of the things that we've heard about in terms of quality of management. Do you have the right strategy? Do you have the right product set? Do you have the right cost base? So we spend a fortune of time, if we like a particular area and we like a particular geography, that sets the start of the discussion. Then the balance is actually assessing the merits of the investment case itself. So I think number of opportunities is high and probably growing. If we look at the amount of capital flowing in, certainly through private equity channels into RCT, it's big numbers. More than $2 billion, excluding the tower co-financings, we've seen more than $2 billion of private equity money flowing to RCT in the last 2 years. So it's an important sector.
Great. Why don't we skip down to the end to Keith, just to keep it interesting, so you don't know where we're going to go. Keith, you're sitting at Rand Merchant Bank, and I imagine that some of your investment priorities look a lot like your colleagues at Standard and Nedbank, but why don't you give us a sense as to where you fit into the financing ecosystem and what you see coming down the pike for 2016?
Sure. So where we sit in the team, so yes, we're an investment bank, but we sit very much focused on the infrastructure side, me personally. So the themes that we like to follow, certainly the telco sector, are certainly the towers, the fiber, these sort of big capex expenditures. The big corporate borrowers, the MTNs, the big GSM players, I think everybody's pretty comfortable with those guys, and they can draw capital quite quickly. But we like the new combinations, the optimization of the sector and the funding of that. There is an element, I think, of new startup ventures. We were talking earlier about the last mile, how to fund that. I do agree that tends to be more on the equity side of things, but we're very interested in, as soon as that falls into the more sort of corporate style, that we can really start industrializing the funding for that sort of space. I think there's another theme that we follow, and obviously being an investment bank, we also like the combination of existing businesses. So the idea of convergence, combining businesses, there's certainly a lot of story around that in South Africa today, but we certainly watch that space with interest.
All right, why don't we complete the round out of the banks and come back to Mike, and why don't we ask you the same question?
Teresa, so I think very common themes. I think what Yuri and Keith have said really hold up. But I think the most fundamental shift that we are seeing is that if we go back 10 years ago, there was a land grab. Everybody was really getting out and investing incredible amounts in big capex spends, the big fiber plays, whether it was terrestrial or undersea, satellites, everything being done on the basis that you could sell capacity in huge chunks and that you could do a classical project financing, take the revenue streams and discount effectively big lease streams. At the moment, everybody's trying to convert that capex into OpEx. So for us, the real challenges are to try to assist in converting that capex stream into an OpEx type of stream for the ultimate MNOs. And so what's really interesting in Africa at the moment is while there are a lot of small startup type plays, there are businesses that are securing spectrum and licenses that really do have a good story that we think take us to the next level. And the challenge, I think, from our side is trying to get in early enough on a basis that you provide almost a bridging facility to a point when the business has established itself as a standalone. So the equity conversion, so from a startup where you require more equity guarantees to support the debt to a point when you can actually do it on provide financing on a standalone basis. It is difficult. So what we're increasingly seeing is, again, going to the theme of the old major capex to the new startups, people sort of building to fit. In the old days, the philosophy was just build as much as you possibly can up front and the customers will come. That's hard to finance in some respects, but now building to suit. So in South Africa, we have a number of small, or not necessarily so small, but terrestrial fiber players that go and acquire a customer before they dig the first trench. Those are models that are more easy to sort of bank. We're seeing the same in the data center space. Once upon a time, the theory was you built the biggest 4G data center that you possibly could, and you'd hope you'd fill it up. Now we're seeing modularity, where people say, right, I'll build enough, bring on the customers, and as I keep growing the customer base, so I'll keep expanding, and that really makes things imminently bankable.
Good. All right. So I think we've got a sense of the landscape, which is that we've got the three big banks here, and they do what we expect banks to do, and they fund established, proven entities on a debt basis, typically to help them grow and expand. We've got Eden here representing Convergence as the equity player, but again, we've got you playing a role with what you said is growth capital, expansion capital for established businesses. All this is to say that, Annika, we're coming to you now, and and we're looking to you to tell us how the IFC can play a role, because just as Keith said, we know one of the challenges is the last mile. There's still some issues. We've got a lot of capital sitting here, right here on this stage, but we understand that that capital is for large established companies. The IFC plays a different role, and maybe you can help us understand what that role is with the many financing challenges that we know exist.
Sure. So IFC, International Finance Corporation, is a development finance institution. We're part of the World Bank Group. We're the private sector arm of the World Bank Group, so we fund private sector companies in emerging markets. My group focuses on the telecom, media, and technology sector. So as a development finance institution, our role is really to spur sector development, in our case in the TMT sector. So we're very much focused on trying to address market gaps. So if you look at what we're focused on these days is really broadband in Africa and some infrastructure share. We have heavily supported 4 or 5 years ago the independent tower companies, but now they are able to raise funding from commercial sources. So we have shifted our focus to broadband, and that is wholesale, retail, fiber, wireless. There's at 6% or so broadband penetration, there's need to invest in everything. So access networks definitely, but also the big pipes. So we're trying to fund entrepreneurial ventures as well as more established companies. We can invest across the capital structure, so we can do equity investments. We usually do it together with our private equity colleagues. Mezzanine or senior debt, depending on the development of a company, but because broadband sector is so underdeveloped, so early stage, these days we're primarily doing equity investments.
Well, Keith raised the point of the last mile, and I think everybody here knows that the opportunities for those in the telecom sector in Africa will really explode once the last mile issue is resolved. Is this a part of the market that the IFC is investing to address?
It's definitely one area. So we're looking at it both from the wireless as well as the fiber angle. So we're investors in a 4GTD operator, Pan-African operator, looking to do more. We've been looking for many, many years, actually. And same on the fiber side. Whether that's fiber to the X, whether that's enterprise or fiber to the home opportunities, but we're also very much focused, and I can't emphasize this enough, the big pipes are also missing. You have to, the access and the big pipes development has to go hand in hand. Otherwise, there's going to be some kind of bottleneck in the system. So we're equally pursuing those and really hoping to find kind of wholesale open access opportunities, and some are popping up. Some governments are spinning assets out. I'm expecting some mobile operators are going to start doing it. If I look at some of the other geographies, I cover TMT globally, and in other geographies, mobile operators are starting to spin out fiber. So hopefully more opportunities will come off of that, because some of these infrastructure projects are extremely time-consuming and very expensive to build right away, and others make it very expensive and large-scale projects and high risk. So we're trying to, find the opportunities on all of those, and sometimes on a purely private basis, sometimes on a PPP basis.
Okay. Let's talk about geographies, and why don't we start with Yuri and go right down the line. Yuri, can you tell us what regions or countries in the continent you see as having particular growth opportunities that you're looking to fund in the next couple of years?
I think despite the current somewhat challenging macroeconomic situation and the situation with some of the currencies, we still see East Africa as a real growth engine of the continent, and that would include Kenya, Tanzania, Uganda, Nigeria as the biggest economy on the continent. Definitely is an area where we will focus. And despite the challenges that I've just mentioned, we think there's still enormous growth potential there. Other countries that have potential, but perhaps in the medium term, are countries like the DRC, and also countries like Angola. Once the price of oil stabilizes, I think we'll definitely see a lot of development there.
Great. Mike? Do you want to tell us geographies?
I agree with that. I think the maybe two countries that sort of are a little bit off the radar screens are countries like Ethiopia, where you've got a population of 80 million people, one monopolistic sort of telco regime. So as that starts to liberalize and open up, I think there's massive opportunities there. We're also very heavily invested in the renewable energy sector, and there are incredibly good stories coming out of Ethiopia where small investors are doing amazing things with PV in rural areas. Mm-hmm. So I think that flows over into the telecommunications sector in particular. The other country, I guess, is, it has been mentioned, but the DRC, again, the size and the scale of the country, the lack of connectivity means that the opportunity is just, I guess, much more visible and much more abundant. Something that I think one of the big themes that I think comes through almost across the continent as well, that is reasonably underdeveloped, is rural telephony. And I think that becomes a big play, and the reason why it suddenly becomes an important play is that the cost of technology has come screaming down. So the cost of a base station, when we started looking at towers deals 5 or 6 years ago, you start off at about $230,000 US per site, entirely fueled by diesel generators, massively complex logistically to provide the diesel, etc. Prices have come down dramatically to the point where modular containers are available at probably $30 to $50 US a site. So coupled with a hybrid power sort of solution. So suddenly you've got people in rural areas saying, look, I want a smartphone and I really do want a degree of bandwidth. Mobile operators are starting to look at it and say, well, that ARPU segment is going to be going up, whereas everywhere else in the urban areas it's classically coming down as people are able to access other, accessing Wi-Fi for argument's sake rather than just using the GSM networks. But the price points start to mean people can make the CapEx investment again. Satellite backhaul for some of these sites has come down incredibly. High concentrated satellite now says suddenly there's a new operating model, and I think that's a sector we're going to have a look at to see how we can actually roll that out. It's a really good story as well for DFIs and agencies like the multilaterals and the DFI community. And I think there is an opportunity there that mobile operators are looking for a solution, and I think we're getting pretty close to it now.
Good. Eden, the geography question?
Yeah, so we segment the market in terms of size and maturity and growth profile, and they're very different answers for us in the different markets. So in the bigger, more developed markets, take South Africa, for example, there's clearly not enough wholesale infrastructure, but it has been developed and continues to be developed to the point that, back to the earlier discussion, access now has become a reality in terms of equity investing and even debt investing. So we saw, we were involved in and indirectly invested in the first wholesale Wi-Fi player, which is a new model. The fiber to the home, was a non-existent feature of the market 2 years ago, and after, in particular, one disruptive player and a well-known case study, according to the Fiber to the Home Council, there are 26 players out there deploying access fiber. Now, they probably won't all survive and there'll be consolidation. But the point is that type of investing has become possible now, including actually one of them raising a big debt package. So it changes quickly. So in the mature market, you can sort of move towards the access side, but also you can look at specialized solutions-driven businesses. If you said there's a certain amount of ICT and IT and corporate infrastructure in terms of skills and networks, then you get some very interesting solutions. For example, I mentioned on the financial services side. In other markets that are big but are still missing that wholesale component, the big pipes Annika referred to, we're actively looking at that segment. And if we go to the other extreme, to the much smaller markets, we're looking at a lot of wireless players that are delivering enterprise services in markets where it's not really focused on by the large players. And there, what we try to do is actually pull together a coherent grouping of similar assets and actually give them the scale to compete with the big guys. So getting bulk procurement, affording the type of skills at a group level that maybe doesn't make sense at an in-country level. So very different strategies for different markets. But overall, despite I think the acknowledged economic challenges of the continent, we're bullish.
Good, thank you. Annika, geography?
Yeah, I think we're looking at it sort of similarly and in a big brushstroke kind of fashion. Sort of east and southern is probably more access and OTT type things, and maybe west and central, maybe with the exception of one or two economies, is probably both long haul wholesale as well as access networks. There's a lot going on in countries like Nigeria, for example, on basically every segment of our industry. So we're very much looking there. And then because of our developmental mandate in general, we're trying to find opportunities across the continent.
Great. And Keith, you get to wrap up the geography discussion.
Yeah, geographically, I think obviously from a macro point of view, it's probably inverse to where the investment is needed, if you will. So we see East Africa from a TMT point of view being actually one step ahead of the South. And probably from a macro point of view being a better investment destination. So it's a bit the wrong way around. South Africa, I think, sort of on balance is okay, a lot to be done, as you say, last mile, etc. But my honest sense is that West Africa needs still a massive amount of investment in infrastructure to up the quality of service, the ability, or certainly the data angle, the broadband angle, certainly in West Africa. But it's not a great time from a macro point of view for West Africa. So I think that for me that's where the challenge lies, is where the investment opportunity is versus where the macros allow for it.
Good.
Can I just say something on the macro, just because I'm looking at all of emerging markets. So I hear a lot of negativity about growth in Africa and the like, but if you look at other markets and where their growth projections are, other regions, Africa is doing actually quite okay and projected to be okay. I know currencies have depreciated a lot, and some of them still have to. But other than South Africa, growth is expected to be anywhere between 4% to 8%, despite commodity issues, despite China's growth slowing down. So, there's maybe compared to the last few years, growth is slowing down, but compared to the rest of the world, it's actually quite good.
Good. So another topic that we're meant to discuss in this panel is consolidation. And I think consolidation is relevant for a number of reasons. I mean, we've talked about scale in this panel. We've got 3 big banks. We've got all large institutions. And we've talked about the scale and the need for consolidation in African markets is assumed. And so perhaps we could talk about how you, from a financing standpoint, see that playing itself out. Do you anticipate that there's going to be merger and acquisition activity in Africa to create consolidation so that you get a lot of small players who are able to operate more efficiently and achieve scale? Where do you see consolidation going? And why don't we even start back down on that end and work our way this way?
Yeah, so originally we thought this consolidation story was going to be about smaller network operators in various markets being bought up by the big network operators, across the continent. That doesn't seem to have happened. I don't really know why. There are operators out there that are third, fourth operators in a market that are struggling. EBITDA margins are low, but they seem to be ticking over by almost not underinvesting in capex and just subsisting. So I'm not quite sure why that, let's call it third, fourth network operator consolidation hasn't happened. For me, the irony is that the consolidation story, in my view, has happened in South Africa, where you suddenly have a Vodacom and a Neotel potential transaction, which has frankly shaken the market up, and then suddenly everybody's running around, scrambling, trying to find partners to compete in that new landscape. So again, the consolidation story is not what I expected.
All right. Do you want to comment?
So I would say I think this has been talked about for the, last 10 years, I think, or more. Everybody expecting consolidation. And I would say there is and there isn't. So you see, obviously, for example, Millicom buying Zantel in Tanzania, or Bharti is set to be, selling off some of its or all of its operations in Africa. Or in Côte d'Ivoire, the government is trying to pull together licenses, three licenses to turn it into one. So you see a little bit of that, but just when you think it's happening, it's not. So if you look at Uganda, right? So, okay, Warid was bought by Bharti, and then AfriCell went in and bought Orange. But then you have the TD, LT guys coming in. Some of them also offering voice in addition to data services. So just when you think the market, at least from a sort of voice perspective, is consolidating, it's not. Other players are coming in and growing the ecosystem. Now the margins, I think unless you're the first or second operator, you're probably not making money. So I'm sort of amazed that more consolidation hasn't taken place. But I'm not sure if it's much to be had in the future, and definitely not how we would have expected it.
Mm-hmm.
Yeah.
Eden?
Yeah, I think there has been some. If we look at kind of both MNOs and then look at ISPs, alternative providers, you used to be kind of north of 200 on the former, and now probably closer to 150. So let's say an average of a rough average of 3 per market. But in terms of the second category of ISPs, on average more than 15 per market. So you're looking at, let's say, 20 people, certainly in the urban areas. To Mark's point, rural is a different discussion, but in the urban areas, fighting over commoditized service with more than 20 players is just not sustainable. So we do think there'll be more. Maybe some of the challenges, regulatory and the like, will get eased, and we will see a wave now. There's this wave, Telkom Cell C. But that's horizontal. The other thing we find very interesting is kind of vertical integration. So you've got the operators that are feeling a lot of pressure, both because of the supply side, so the number of players in there, but also this fundamental shift from a voice world to a data world, and what that's done to ARPUs and CapEx. So on the one hand, it's enabled in helping to create the wholesale infrastructure side we already discussed, but on the other, it's got the operators, or everyone, frankly, looking for new revenue sources. So we see then people trying to move up the chain. So you've got infrastructure players moving into services, Telkom buying BCX, for an example. A lot of operators spending enormous sums of money, either organically or by acquisition, to bolt on, let's say, a financial services platform. All the big guys come out with their video on demand services now. So we see a lot of vertical movement in terms of the next wave of M&A.
Teresa, so I think Mr. Siegel has hit the nail on the head. The big pink porcupine in the room is the principle of everybody is waiting for the next big thing. Every operator is sitting long cash, not investing that money, and is sitting and saying, I want the next big thing. And the big thing is driven by pipe and by spectrum. So everybody's waiting to, you want to do the consolidation play only if it brings spectrum on board. The old days of trying to consolidate to bring more subscribers on board and hoping that subscriber numbers were driving valuation doesn't work. So if we talk to MNOs, they say, the only thing I'm not investing in is CapEx at the moment. I'm prepared to start taking early stage venture investments into people who might bring a new solution, might bring something which is going to drive the next wave of services, etc. So to Idan's point, it's much more vertical now, and I think that carries on for the time being. People are sitting on cash and saying, I really want to make the investment, but I'm not sure what it is. So spectrum and pipe that can support these applications and these services that are going to come through, I think that's really where everything's hovering at the moment.
I think Keith mentioned he was a little bit perplexed about why there hasn't been more consolidation in the number 3 and number 4 players. Perhaps one of the reasons for that is that a lot of these entities appeared in around 2008, 2009, where the market was still growing strongly and there was a high profitability. I think since then, some of these newcomers who've deployed quite aggressive commercial practices have, to a certain extent, destroyed some of these mobile markets and led to a decrease in the profitability. And as a result, trying to exit from some of these investments today would invariably involve a painful loss. So I think everyone is trying to delay that moment when you have to sell at a price lower than the one you came in, or at a lower price than your acquisition price, plus all the capex you've put in. And I think it is quite painful. SR has exited from Kenya, for example. They spent a lot of money there, and I'm not sure that the price they got for it actually covers that. Etisalat divested Zantel, and for Millicom, I think that was a great opportunity to buy. We've seen other players exit, Worried, Orange from East Africa. So I think the trend is there. It will happen. The question is when it will happen is when the investors say that that's enough pain. What might accelerate it is the fact that we've heard a lot in this conference about telecoms operators moving to LTE and investing in LTE. And we've heard that particularly from the number 1 and number 2 operators, how very keen they are to roll out this new technology and provide the services, etc. And of course, that will require investment and capex. And for the number 3 operators, which, as Aniko has pointed out, a lot of them are actually not profitable and maybe even be loss-making. For those, the decision to move into LTE is much more painful, simply because they don't have the resources, they don't have the ability to borrow. So what you will see in the future is the number 1 and number 2 pulling away in terms of deployment of LTE and the services that it can offer in terms of quality and speed, and the 3rd and 4th and 5th players being slowly left behind. And I think as data grows and as consumers demand more data and cheaper data, these entities will see a reduction in their subscriber base, and ultimately they will be forced to exit.
Here you talk about profitability. Let's bring into the profitability discussion the cost of capital. What do you see as the cost of capital to the large MNOs based on where you sit in the market? What do you think that their cost is for the type of lending that you're doing?
Well, I think for the MNOs, the cost of capital, and for the large MNOs, it's always been relatively easy to attract new capital. And it's also true that in the last couple of years, the large players have not had to add new capital and raise new capital. They've always been able to borrow relatively cheaply, and that goes for the likes of MTN, Vodacom, all the major players, even across the continent. The likes of AfricaCom are able to command extremely low prices in terms of their debt, simply because of the market share, the size of their balance sheets, and their profitability. I think as you go down the market rankings to the number 2s and number 3s, I think the situation there gets much worse. In many cases, the number 3s are supported by their parent companies through equity injections, and the number 4s and number 5s really struggle to get any type of funding either from their sponsors or from the banks.
All right. And when you say relatively cheap, what do you mean for the large players? What does relatively cheap mean in numbers?
That's always a tricky question to ask, and of course it changes from time to time. But just to give an indication, around 1 to 2% for medium to long term was something that people were used to looking at.
That's cheap. Good. All right, we're going to start to wrap up, and I just have a couple of last questions I want to ask. Annika, I'm going to come back to you for a moment and just ask, because you sit in a particular place at the IFC with a unique mandate, the question really is for you, do you think that when you look at the telecoms landscape in Africa, do you think that the amount of capital that is available is enough to keep up with the rapid adoption of technology? Or which do you think is the constraint? Do you think that, well, I've asked the question. I hope you understand my question.
Okay, so I think there's, at least from if I look at TMT space and the private sector PE investments flowing into Africa, there's a lot of private equity money coming in, but it's coming in from sort of large, established PE firms. They are constrained in a way that they need to find large opportunities to deploy capital. So in a way, there's lots of money coming in, but given the sector development, especially in the broadband space, those projects tend to be smaller size. There isn't exactly a match, right? So there's a little bit of a vacuum in kind of the early stage angel VC and even in the very early growth stage PE space when I don't think there's enough money available. There's lots of opportunities in that space. There's lots of money available, but those are big ticket monies that are not set up or don't want to get into these smaller ticket opportunities. So there's a little bit of a mismatch.
Great. I'm going to follow that question with Eden because you are sitting here as an investor on the equity side, and I know I'm looking around the room. I've met some of the people here, and I know there are people here who are looking for investment that's probably more in the venture capital realm than what you do. Can you perhaps throw out some names of some of the players that you see who are operating in that space, more on the venture side?
Yeah, it is a very difficult thing. We discuss it often, is that bottom end of the pyramid doesn't exist. And I guess the sort of Nirvana, Silicon Valley type ecosystems require a lot of components to get that scale and that virtuous circle. And that's about university infrastructure, students, entrepreneurs, investors, angels. So it's hard to just have one or two players. So it's, people are trying, Cape Town's trying to position itself like that. Kenya's got a lot of kind of branding and development in terms of setting up those kind of ecosystems, to a lesser degree Lagos. The way we look at it, we don't have that critical mass of the VC kind of world that we see particularly in the US. I think for early stage entrepreneurs, it's a tough road. It's about bootstrapping, it's about friends and family, and it's about angel investors to get you into that point that you can start tapping the bottom of the institutional market. The only thing I'd say, and we discussed it in a very specific context in terms of where do 4G players access money, and particularly at the smaller end. The cliche about the finance investment community is everyone's first to follow, and I think it's true. So all you need is some success stories. When Annika referred to, let's take something on what's now enormous in the form of towers. When the early tower codes came out, a lot of skepticism. As soon as the market was proven, capital flew in. Capital is very mobile. It'll fly in immediately from anywhere in the world. So all you need is some success stories, and then everyone's attention is piqued, and they'll say, which is a similar type of asset to that. So back to the discussion on FTTX, or FTTH, particularly in South Africa, if the guys I mentioned make a success of it, you can be sure the balance of them will start to attract investment.
Fantastic. Well, I think that I've been told that our time is up. I'd like to thank this very informed panelist for enlightening us all today. Thank you.